This is Alan Farley from FX Empire. Let's take a look at this week's top stocks, ETFs, and cryptos. First up is Delta Airlines, which initiates first quarter earnings season in Thursday's pre-market. Now, Delta posted an all-time high up at 63.50 back in 2019, but performance wasn't that great all the way back to 2016. As you can see, we have these sort of nominal new highs. So this is 63.50, and this is like 61. So investors really didn't make much money on it. It fell to a 7-year low during the pandemic decline, came back up and sort of topped out just above the 618 retracement in March of 2021, started to pull back, and then Delta came along, and the other Delta, and hit it with a few blows, and the industry really started to struggle again. Now it fell right here to about a 52-week low during Thanksgiving because of Omicron. But since Omicron, it's really gotten its footing. It's come back up to the 50-day moving average, and it's only a stone's throw, about 2 points from the 200-day moving average, which is aligned with this descending descending trend line. Now, the outlook for the the airline industry is really quite good because there's so much immunity being poured in the system by Omicron that could have a very profitable spring and summer after it's behind us. To all that herd immunity, the numbers could really crash, especially given Pfizer's new anti-COVID drug, that people's behavior when it comes to travel could really improve. So I think there's a really positive outlook for travel stocks this year. Moving on, let's take a look at Coca-Cola now. Dividend-paying stocks, or what you would call these real slow movers, came roaring out of the gates in 2021. That's because of that high inflation, and these stocks which pay dividends can fight that high inflation. They're also considered to be defensive in that they do well in poor markets. Now, Coke came all the way back to this 2020 high this month, and it's just broken out. It's gone straight up since about the low 50s in the last 1, 2, 3, 4, 5, 6 weeks. Very, very nice performance. It may need some time to go consolidate at this level, and this will never be a super fast mover. So if we get up to the upper 60s this year, it's probably pretty good. But there always is a place for these defensive stocks in your portfolio if you really want to sleep at night when growth stocks start to fall apart. Moving on, let's take a look at Microsoft. Talking about growth stocks. Now, Microsoft had an incredible 2021. It had an incredible 2020. It's come out of the gate here, and it's been correcting since November, pulling back in this, I guess you'd call it it could be a bull flag. We don't really know what it is yet. This is what it looks like. It's trying to fill this gap right here. It just did it on Friday. This might not be the end. We might have to wait a little longer for these cycles to turn. There, the daily cycle is at oversold. The weekly cycle is still sort of in a bearish mode, and the monthly cycle's just moved into a bear mode. So I think we have to wait. And if you look at the long-term chart, there's sort of like a trend line here, and I think when we get much closer to 300, you may get a buying opportunity for Microsoft for the rest of the year. Okay, let's pull this back to a weekly, and we'll take a look at Shiba Inu. Now let's take a look with the FTX, because the FTX, you'll see on the daily, shows us the 200-day moving average. Now, of course, it's been tough times for anybody who owns this stock for the last 2 or 3 months. It's really gotten ripped apart. It's fallen about 30% since this high just before Christmas, but is getting close to the 200-day moving average down here at about 2390, which is also very close to the 786 retracement at 2295. So this is probably the area where you want to look if you want to do some bottom fishing. I think the cycles are pretty much saying that as well. If you take a look at longer term cycles, you can see that we're slowly on this weekly starting to turn higher, but nothing really substantial yet. So you really can't buy until you really start to see a few buyers come into the mix. Finally, let's take a look at another sleepy one, and this is the Xlu Utilities Fund. Now, this, of course, is a slow mover, the Utilities Fund. This one's come up to its 2020 high, just like Coca-Cola came up to it in in December, and it spent almost a month here going and consolidating. Well, it posted very high volume on Friday during this reversal right here. I see the last reversal looked just like it, and it looks like it's going to take another try at trying to break that resistance at 71. Again, in addition to being an ETF, it does pay a pretty nice dividend. So this is another one to look at as a defensive play in 2022, which could be a very interesting year.